This is the Wealth Roundup with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. Any postings and or social media content are the views of the advisor and do not necessarily reflect BMO's position or viewpoint. The information herein is for Canadian residents only and does not constitute any financial, legal, tax, investment, or other advice. Welcome to the Wealth Roundup for the week of September 3rd, 2025, with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. Summer comes to an end. We're into September. Just having a quick look at the markets over the last 3 months. The Dow and the S&P up anywhere from 6.5% to 7.5% over 3 months.
It's been terrific. And, the TSX has continued to stay really strong. S&P 500, Dow, and NASDAQ are going to be off a little bit today, kind of eroding some of that growth over the last 2 weeks. But we really shouldn't complain. A couple other notables, gold and Bitcoin, which had been weak, both have kind of stabilized here in the last couple of days. U.S. dollar is back up again. Fortunately, Canadian dollar is down. Oil prices up 2% to start the week on some increased tensions with Russia and the Ukraine, so some concerns about supply, and there is an OPEC meeting later this week, and we're not expecting OPEC to increase supply. So expect the next 2 weeks to be really busy. There's a lot going on, more inflation data coming out, more job data coming out, and then a key meeting by the U.S. Federal Reserve on the 17th of September. So summer's over, and the pace is really going to pick up when it comes to the financial markets.
Let's talk about investing and having an investment manager and management fees a little bit today.
Yeah, so this is a topic that I'm really glad that we're talking about today because there are some regulatory changes coming. So we'll talk a little bit about that. But I find more often than not, one of the most important things about having a professional working for you, doing just about anything in life that gets maybe a little bit confusing when it comes to investing is how much are we paying? And I think part of that problem is that there's layers. So if you do work with an investment advisor, one of the best questions to ask is, how do I pay fees? Explain to me how I pay my fees. And even if you're working with maybe a discount broker, kind of one that you do it yourself, is again, frequently reviewing how you pay your fees because there are layers. And so somebody like myself, professional portfolio manager, we would charge advisory fees to our clients, which are generally a percentage of assets. And I would say that for the most part, that's how the industry has evolved. If we go back to the brokerage industry, say 2 decades ago, it was largely based on commissions. You wanted to buy a stock, you wanted to sell a stock. You had a commission to buy, you had a commission to sell. And so with the advent of discount brokerage firms, I think the evolution towards lower fees is that commissions to buy or sell stocks have kind of largely gone the way of the dodo bird to a certain degree, although they still exist in discount brokerage, although on a much smaller level. So whereas in the past, you might have paid $150 or $200 to buy a block of stock, now in discount brokerage, you might see trades as low as $6.95 to go and complete a trade. Whereas when you're getting more of a professional service, which might include financial planning, which might include tax planning, estate planning, where you're discussing strategy for your family or your business, is that your broker tends to charge you a percentage of assets. Now, this is generally recorded on all of your monthly statements, so you get an idea of what you're paying in dollars or cents. Where we're moving from a regulatory basis in the investment industry is we're going to see starting January of 2026 is investment firms are going to start to produce what's called total cost accounting. So all of your costs for all of your fees. So where you'd have the advisory service that your broker or your financial planner is charging you, but also if there's any third party fees that are maybe hidden. So if you own things like exchange traded funds or mutual funds, where there tends to be a product fee, is that there could actually be 2 layers of fees. So now there's going to be more transparency in terms of what your total cost is to be working with the firm that manages money for you. And of course, where we're going with all this is how do you determine what value you're getting from this relationship? You really need to know what you're paying versus what you're making in order for you, the client, to be able to say, yes, I am getting good value for my service.
I suppose there's a big difference between something that's a self-directed compared to having an investment or portfolio manager, which is similarly in the real estate. I know real estate is commission-based, but you either go for sale by owner or you go with a real estate agent,
Yeah.
and there's a service that's provided there. So there is value, and it's not like you just came in off the street, off the potato truck. You've got training and you've got experience and everything that goes along with that. How have the government regulations come into play, or government monitoring of fees with an investment portfolio manager?
So the investment industry, probably, I'm glad you mentioned real estate because there's lots of similarities. Is that the investment industry largely is self-regulated. So there's various regulatory bodies that are responsible for supervision and setting rules, and they all work arm's length from the superintendent to financial institutions. But the goal in Canada over the last 5 years has been improving transparency. And I think that part of that is that when we saw commissions kind of going away, we saw the rise of something called deferred sales charges, which was kind of another indirect way where the investment industry would kind of earn fees and kind of pay out commissions, but it left the client in a place where they weren't always necessarily sure what their fees were on an ongoing basis. Maybe they would have an idea what their fees were when they first started a relationship, but then without having that reporting after that relationship had begun, there wasn't necessarily this clarity built in on a consistent basis in terms of how much people were paying in fees on a regular basis. So that's, the investment industry has become more complicated. If, again, we look at, what investors, how they could have invested 20 years ago versus how they could have done things 40 years ago versus how they can do things today, it's become much more complicated. There's more financial instruments. It's harder, perhaps, for people that just want to casually manage money themselves. So every now and then go and place a trade on their discount brokerage account versus somebody who really enjoys managing their own money and actually dedicates, several hours a week to managing money themselves, to people who want to be completely hands off and would go and hire a professional management team like myself or my peers in the investment industry. So I think one of the things that all investors should kind of take away as a lot of confidence is that the Canadian financial system and the regulatory body for investing in Canada is highly scrutinized, is highly supervised. And the supervisory arrangement where the firms, they want to put the client first in terms of making sure that there's no conflicts of interest. So, we welcome these changes in around transparency. I think in the end, what we'll continue to see is fees will continue to trend down, and we'll see more reporting as compared to less reporting. But in the end, I think it just, walkway for a client is probably once a year. One of the questions should be, how am I doing on my investments? How much am I paying? And how am I paying for my fees?
And of course, regardless of whether or not you are the portfolio manager or one of your colleagues, communication is paramount. And being able to find out, have a conversation, or even get information on something as simple as the podcast available on your website is something that's really valuable for any investor.
100%.
Very good. Thank you, Patrick. The Wealth Roundup for the week of September 3rd, 2025. Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns.
Have a great week, Terry.
This has been the Wealth Roundup with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. I'm Terry Evans. The Wealth Roundup is part of the Reluctantly Podcast Network.